Ladies and gentlemen, welcome to the Fintech Frenzy. Today, we got even more earnings. So the one that I listened to is the only earnings call I've listened to out of the three so far because I've been slammed with work. But that being said, Block announced today, Coinbase announced today, which I'm going through their call right now, going through their report right now, and Mercado Libre. So I own two of these stocks. I don't currently have Coinbase. I am a crypto advocate. Love the asset class, but Coinbase faces some concerns that are just existential, in my opinion. And so it might do well, but who knows? That being said, I also have some Sofi stuff that I want to cover for you guys. A little video that was marked and what's going to happen over the next week. But aside from that, let's jump into it. All right. So first off, Block stock. This is the parent company that takes care of Cash App and Square Seller. They have a new mining chip that they end up selling. They've got a couple of other things, Afterpay, Tidal, the music company, weird stuff like that. The two that we're going to focus on is Cash App and Square. And you can see this so simply whenever you look at this chart right here. I think they have 5 or 6 companies in total that they track, but this is what we should be focused on, all right? This is their gross profit, and Cash App's been an absolute dominator, all right? Square's doing very well, and then in this tiny gray that doesn't even appear to make a bar is everything else that they do, right? Now, that being said, they do have some interesting things going on in some of their other businesses, but for the most part, I'd be wasting my time if I were to talk about anything other than just what's going on in their direct business. Now, whenever it came to profitability in this business, they dominated. And this is why the stock is actually up in after hours. Let me catch what everything is doing in after hours real quick. Every time I open up my thing, then I remember that that we're sponsored by Moomoo. So Block is up 5% in the after hours. Coinbase is up. On some coin token. Coinbase is up 3.2% in the after hours, and Meli or Mercado Libre is up 12% in the after hours. Holy freaking crap. That's awesome. So I own that stock. I own Block. I own more Block than Meli, but I should be holding it the other way around. But yeah. Anyway, so let's talk about it. So revenue, not so great. Actually ended up missing. So they were expecting $6.28 billion. What they saw was $6.16 billion, actually a miss of $12 million. But that had zero impact on the actual stock price. One, because a lot of that actually has to do with Bitcoin's price fluctuation, and Block's revenue is not real revenue. It's super confusing. They have to go out and buy Bitcoin to then sell it to their users, but they have to announce that as being real revenue, even though they might not make any money on it. They make money on the sale, but that's actually what the revenue is the sale. But that being said, of their profitability, EPS was expected at 85 cents. What we ended up seeing was 93 cents, a beat of 8 cents, okay? Gross profit was expected to be at 2.17 billion. We saw 2.23 billion, a beat of $55 million. Adjusted EBITDA, 680 to what we saw, 759, $79 million beat. And adjusted operating income was expected at 315. We saw 399, $84 million beat. Across the board on profitability, check marks galore. All right. Some of their Cash App, small individual things that they're working on, also very interesting. The actual amount of actives only went up by 1 million. They went from 56 million to 57 million actives. Nothing crazy, okay? Slow grower. But internally, their Cash App card actives had gone up 13% year over year, bringing it up to, I think it's 24 plus million users that have their debit card, which is really going to increase the total amount of revenue that they bring on. But what was really taking the show this time was something called Cash App Borrow. Okay. This has been on my radar for some time. I've known about it being this under $200 sort of make sure that you have enough money whenever it comes times for bills. That was up 200% year over year. They're originating $2 billion worth of loans based on $100 average loan sizes. They said that these loans, people will take out a $100 loan and then pay it off and then ask for another $100 about 15 times a year on average. What the heck is that, man? That's actually crazy. Like I know that this is potentially seen through multiple quarters, but I want to know how fast this grows to sort of monitor how weak the lower end consumer really is. Like Cash App said, even in this quarter, they're going after an audience that they are targeting that makes less than $150,000 a year in terms of their family, right? So the average person has to make less than $75,000. If that's their target audience, that's really the complete opposite of what Sofi looks for. They look for anything above that, right? That's sort of their floor. Now, I don't know. There'll be a great insight into how the actual user is, doing, or sorry, consumer is doing. Cash App Pay is also doing very well. So this is them going after the likes of Visa and MasterCard and joining the ranks of Apple Pay and Google Pay. So then people could just pay for things online directly from their Cash App balances. One of the largest, companies that they just started working with was actually Google Play, which is their, app marketplace or whatever, where you can go and get all your different, products and services. Well, that services over 250 million users. So those people, of the 57 million of them, or maybe even 80 million, if you consider the not so active users, can end up using Cash App Pay. This is continuously growing at a very steady pace of about 1 million new users per quarter. It's pretty insane. They said that they offer really great, pricing for that, and that they actually could be a real payment player going forward. They increase guidance across the board. Like I'm telling you, I was talking to Steve before, and he said he'll never invest in this company. There's companies that are priced the same way that offer better service, offer a better business at a cheaper price. I don't think so, man. I think we are in the season of fintech right now as we go into rate cuts, and a lot of people are looking past the names that I'm looking at, and I do not think that's going to be the same case forever, especially in these earnings results that are coming out. Like fintech across the board is doing very well. That can change very quickly if we continue to see something going wrong with the consumer. That is the biggest worry, is any sort of real recession that ends up happening, which is seemingly closer than ever, could be a real problem for fintechs. But if they survive, these companies could grow extremely strongly, because the total addressable markets here to take from traditional financial services is unbelievable. Another thing that they said on Cash App on Block for the other side of the business is actually Square. Now, they've actually had between 4 to 5 different apps that are on the app stores, depending on whether you are a restaurant or an in-person, retailer, in-store business that is a retailer. Maybe you're selling clothing or something like this, to now actually switching to a one app solution. They think that the onboarding here is going to be phenomenal. They went from a 30-step onboarding process to 4 in this quarter. Holy crap. It's unbelievable. They are also, a lot of this this profitability that they end up are bringing on is, they had a $1 billion repurchase plan for Block before, because of the success and the, them wanting to actually pay off the amount that they were doing in stock-based compensation. Well, they just said, hey, we're actually going to add another 3 billion to that to do way more than just paying off the stock-based compensation. We want to essentially bring down the total flow to the business overall for investors that have trusted us during this process. Yeah, I've got so many notes on this. But I should probably move on because we have other stocks to cover. Oh, one other thing. Of course, they brought up the idea. Oh, okay, wait. A couple more things. One, they said, we want to move faster. And with technologies like AI, these are going to really accelerate the business. And we couldn't be happier in the state of business that they are at to incorporate AI. Another one, with Square, not only are they bringing the onboarding process much better, bringing it down to one app, but also the sales teams have been quite lackluster there. And that is actually what Jack Dorsey is pointing to as maybe one of their biggest points of failure, right? And so the old CEO of Afterpay, the company that they acquired that was all over the news, that they acquired them for $29 billion. Well, that wasn't necessarily true. It was an all-stock deal. And in fact, by the time that the deal was actually finalized, it was about anywhere between $11 billion and $13 billion. Much cheaper than the original 29 that people had suspected. But I digress. So whenever looking at that old CEO, supposedly his real talent was building the most successful sales team, and that's why Afterpay took off. So he's going to be now in charge of dealing or sort of overseeing all of the sales teams for not only Square, like all of Block's businesses, but Square is going to be the main focus there of sort of reinvigorating it, setting much higher standards. And I honestly believe we could see a real reacceleration in this business. A lot of people, I don't know why, they have massive hate for Block. Maybe because the way that Jack Dorsey has done his his shareholders in the past. That's not this Jack today. He understands that if he wants his stocks to continue to succeed, he is going to have to give some love to his shareholders. The growth is there. The technological excellence in the businesses that he creates has always been there. But now he has share buybacks, he has plenty of profitability, and now he's showing that he can successfully operate a business that is, north of $30 billion, unlike, the old sentiment that he was a great startup founder, but once it started getting too big, then he couldn't run a corporation. It's seemingly like he was falling into some of those traps, like the old Square CEO, like the girl that he had run, I forget her name again, I should have looked it up. It's seemingly like he went in there, he became the CEO of Square, like of that segment, and completely, this is why we're seeing it go down to one app. This is why we're seeing the onboarding process go to 30 to 4. Like he's just taking a real, like, what do you call it? Like first, not something, oh my God, it's right on the tip of my tongue. Whenever you completely I keep thinking first mover's advantage. That's not what it is. Anyway, I'm going to get so pissed. Someone please write in the chat. It's what Elon Musk always does. First principles thinking. That's what it is. First principles thinking. So he absolutely embodies that, right? Rethinking his companies and willing to redo the designs and get rid of a lot of this clunky shit that his old first principles. Thank you guys. Appreciate all your help. But yeah, so that's exactly what they're doing. They are completely on the Cash App side, going after a direct deposit users just for a much lower end version or like segment than Sofi is. And in fact, they have 57 million active users and 2 million of them are direct deposit. Sofi has, what is it? 4.4 million, maybe not even, maybe it's 3.8 million SoFi Money users, and 1 million of them are direct deposit users. That is mind blowing. Like the percent differences there is insane. Almost like a factor of 10x, right? Absolutely incredible. Yes, they did. They started offering APYs of 4.5%. Just a teensy bit lower than SoFi, eh? Yes, everyone got their APY. I got it for my own company as well. Everyone loves that interest pouring in. Gotta love it. Okay, let's take a quick moment. And while I'm talking about SoFi, this will be a good pivot away from Block. If there's any other questions that you guys have about Block, my notes are quite extensive after the earnings call, but I'm not trying to make this a Block show necessarily. Let's talk some SoFi real quick, because there was a pretty great interview that actually happened a couple days ago, but I kept being so busy that I was falling behind in being able to cover it. I had obligations after my 30-minute show. And by the way, today is no different. I will be hell bent on getting out of here at 9 o'clock. Life's getting busy, man. All right, let's jump into it.
We're out this morning, and we're going to find out from Anthony Noto, who's the CEO, that the numbers are really great. We want to see if the stock will react to it, because it's not reacted to the last two times that they had good numbers. Anthony Noto, welcome back to the show. How are you doing?
Doing great, Jim. Thank you for having me. How do you and David?
Yeah, I've got David here too. All right, so Anthony, explain to me how you can have such extraordinary numbers, and why do you think that the market's not reacting to the fact that you're 40% now, like of a software product that's absolutely terrific? You have a declining number of charge-offs, which is really amazing at this point in the cycle. You've got people, a huge number of people have signed up. When will people realize that you're going to have a breakout of tremendous proportions and go ahead of it? Or do they have to see the real breakout before they realize, holy cow, why didn't I buy that stock?
Yeah, I think this quarter is definitely a milestone quarter. When people sit back and do the work, they'll realize the magnitude of the transition we made. We had record revenue, as you know, almost $600 million, up 22% year over year. That would have never happened without us driving diversification outside of lending, which only grew 5%. The financial services sector grew 80% year over year. And it's driven by both 40+% product growth and 29% growth in revenue per product, both of which will continue to propel the growth of the overall company. So we've made a transition from risky, capital-intensive lending business to higher return, less capital, less risk financial services business. That's been happening throughout the year. And without this...
If I can pause this really quick, I think that this is super important, but it's one of those things that is going to take 12, like legitimately 12 months for the market to realize. This is what happened last time. SoFi became a personal loan lender over being a student loan lender a very long time ago. But it took probably 5 quarters for the market to realize that SoFi actually wasn't just a student loan lender. You even see some really like archaic dinosaurs still bring up like, oh, student loan company. This is like Anthony Noto. They're going to really face some heat if more people end up, getting some student loans paid off. It's like, dude, we originated $700 million in student loans, and yet total originations were over $5.3 billion. Does that sound like a student loan company? Like, even on the lending side, not even talking about all the diversification of the fact that lending only made up 57% of revenue. Like, it's not a student loan lender at all, and yet you still hear people talk about this. What he's saying now is we're barely even a lender. Like, 57%, not barely, but that's going to go down to 50%. So you're going to have to heavily rely on the other businesses. And like he said, we're getting more capital light and still growing in the same time frame. I think for that to be represented in the market might take longer, at least that narrative, for quite some time. I think the upcoming quarter, what's really going to matter, less about the diversification, more about just overall profitability for 4 straight quarters.
Scale that we've achieved this quarter, we'd have never gotten to another quarter of record revenue and really strong improvement in profits and some good underlying trends, as you mentioned, in lending, which is optionality on rates coming back down. I think in terms of the stock, I think it's just a question of where rates going, where the economy is going, because people feel great about the results. Now they're worried about what's going to happen next week, what's going to happen next month with rates and with credit overall. We did also point out that we saw an inflection point in our delinquencies for personal loans, which is an important milestone as well.
All right, do you think, Anthony, that there's the possibility that people...
Before he continues, that's another thing. This is whenever SoFi management continues to harp on one specific metric, you better listen to them, because they are not lying. They said we did an inflection point. We've passed an inflection point in our delinquencies on our lending. not just personal loans, and lending in general. Are you going to continue to believe that defaults are going to continuously climb to higher and higher levels? Or are you going to take their damn word for it and realize that we actually might start seeing the other side of this massive loan vintage where we're actually going to be maybe losing less and less clients than people suspect? I'm going to take the that man's word for it right there. I'm pointing at Anthony Noto, but it's the screen. Here, wait. That guy over there. Not him. The next guy.
People still remember the heritage, which is student loans. And they say, as President Biden forgives student loans, I can't own SoFi stock.
I do think there's a legacy of us being predominantly a lender. On the earnings call, as a matter of fact, we had analysts ask questions. 99% of them were about lending. There was only one question about the financial services segment and a question of whether we could sustain the 80% growth or not. And I talked through product growth of 40% and revenue per product growth of mid-20s to 30%, which there's still a lot of upside in both of them. And their focus continues to be on the thing that we used to be as opposed to the thing that we've become. And we're trying to emphasize the magnitude of the innovation we're driving. We've rolled out alternative assets, which helped us drive 58% growth in AUM and brokerage. In addition to that, we're providing auto, home, and life insurance. Our credit card business is starting to make a turn. And so we're seeing really strong trends outside of the traditional lending business. And it's going to take a while for people to accept that that's the driver of growth going through the rest of the year.
I think that's really important. I mean, you do allude to the fact that you are becoming the AWS of financial services. Anthony, I've known you for a very, very long time. And I thought to myself, when are people going to recognize that this is actually an enterprise software company that caters to individuals, not individual borrowers, but individuals? And why is that so hard? Why can't people see that it's enterprise software?
You know, I think it's just a matter of people hearing the metrics over and over for the first time. So today was the first time we talked about our interchange revenue, which is growing very nicely. We also, for the first time, started
up 37% year over year.
To break out the growth.
Sorry, did I say 37%? I meant 67% year over year. My bad. I was only off by a factor of 30%.
AUM, as well as our non-interest income and financial services, which ties to those two numbers. And they're much more transactionally driven without a lot of risk, and they don't require capital.
Anthony, finally, just on the macro, obviously we don't expect we're going to get a rate cut tomorrow, but we do, or many expect that we're going to get a rate cut come September. What's that going to mean overall for your business?
That's guaranteed.
A declining rate environment is positive for our business. It will definitely be a tailwind. It'll increase the amount of home loan refinancing, which we're now in and doing quite well. We saw a very strong trend in home loans, up 71% year over year. We're now also doing home equity loans, which is a good diversification because it's a secured product. So both those businesses would benefit from lower rates. Student loan refinancing, to Jim's point, there would be a lot more demand for student loan financing because the rate they currently have relative to a lower rate, benchmark rates, would give them more of a savings. And so it would be a tailwind there. I also believe we'd see a tailwind to our invest business, which is also seeing great growth in AUM. But as people have less yield in money markets and fixed income, they're going to have to go back into equities as a higher percentage of their portfolio. So that business would also benefit. And then last, the value of the loans in our balance sheet in declining rate environments generally increase the value, all else equal, in the loans.
Right.
Well, look, Anthony, I again, people call in all the time on Mad Money, and all I can do is talk in praise. You're doing exactly what you can do.
All right, we'll end it there. One of the things that I also wanted to touch on was them talking about home loans. Okay, this was super important. I don't know how bold of a prediction this is, but I think that it's a prediction that not many are thinking about right now, which is the fact that home loans might extremely quickly become the largest lending product for SoFi in a very, very fast way. And that's not due to personal loans or student loans slowing down. That's that they are in such an inflection point right now of having all the tools to do home loans. They have the profitability. They are a principal lender there, so they can, they don't have to deal with any third-party companies brokering out the loans or anything like this. They can handle it themselves. And while they're doing that, they can actually go and sell those loans for much higher rates. And they have a very perfectly aged demographic right now with tons of money that will be looking for new home loans as rates start to come down. 71% increase in home loans year over year. or 100% growth in purchase loans for their home loans. This quarter was mind-blowing. Like, it's up there on one of the most important statistics in the entire quarter because it shows that they were able to ramp in this category and there was no external, like, the tides didn't shift in home loans. Like, home sales were not looking like this was some boon for SoFi. There was no interest rate cuts that would allow them to sort of show off this increased amount of home loans. Nothing. They just turned the gas up and they went a lot faster. It was an incredible, incredible product to watch this quarter. And as rates start to come down, that will be one where it could be really eye-opening of SoFi's ability to ramp lending whenever they want to. Very, very cool. B-dubs, that's perfectly cool, man. Come back in a couple minutes whenever you don't make a comment every 5 seconds. Talk about Rule of 40. Rule of 40 is the percentage of what their gross profits are as a percentage, and then also their revenue growth combined should be 40%. So SoFi is already past 40%, but Block is trying to re-accelerate to 40% because the Rule of 40 essentially means that this is one of the consistent rules of being a growth stock, essentially. There's a bunch of people that live by that rule. I don't look at it too much. SoFi is 44 to 48%. Okay, cool. I don't really follow Rule of 40 too much. I think that I don't hate on it, but it's not like a rule that has to apply for me to be an investor or something. But it is for a lot of people, a lot of really big growth investors. So the thing that Block is doing right now is they're trying to re-accelerate to Rule of 40 and then keep it going forward. And so the one thing that is very exciting is that for full year 2024 guidance, last quarter, they said, well, we'll probably get up to 32% Rule of 40 by the end of 2024. Now they've actually accelerated guidance to say we'll probably get to 35%. And remember, they still have 2 more quarters to accelerate that even more. Not only did they increase guidance because Q2 was really good, but they also said we expect future quarters to do better than we expected previously. So looking very good. Looking very, very good. Fun fact, my portfolio is down 5%. Anyone else? Yeah, but these days happen. All right. Student loans can scale faster, but I'm happy for home loans. Yeah, I mean, I'm happy for no third-party interference, but I like the total addressable market for home loans. The problem with student loans is like, all right, SoFi is 60% of the private student loan market. Now that market is going to accelerate and just like boom like crazy. I love all of that, but I am very excited to see how home loans do as well. I mean, I don't know. It's a massive total addressable market. $2.4 trillion in the United States alone, something like that. Much, much larger than private student loans. Much more competition, however. Much more. What do I think the next new product that SoFi will announce? Well, so here, let's go and look at this. This is very interesting. And I don't think I've seen anyone talk about it. And even like the really SoFi specific people, it's not like I've been following too closely. I've been very busy this week. Probably the busiest week that I've had in the last little bit. It's pretty stressful, actually. I know, woe is like, pity me, but yeah. Anyway. Okay, what is it? Partner. I think I can find it if I type partners. Here it is. So if we look here, this is kind of an interesting new product. We brought the concept of one-click checkout to individual asset transfers, enabling our members to consolidate their assets the way that they would like. And now we're seeing benefits from that innovation as well. I saw from Vadim, I don't know if he's in the chat or not, but that you essentially can just click on which company that you're transferring those assets from, and then just fill in your account number for that company, and then they will do the transaction directly, which I thought was very interesting. But this is now very cool. A future product. We are now finalizing a turnkey way for companies going public to extend participation in their IPOs at scale to their customers, employees, and partners. With this new directed share program, people can open an account. Open an account where? Where are they opening an account? In-train order and funding in minutes without fees, minimum balances, or speaking to anyone in order to participate in an IPO. That, I mean, legitimately is the next product that I think will be released. But I think, SMB will be right around the corner as well. Yeah. It's 9. Ladies and gentlemen, we did it. We made it. We didn't talk about... Okay, wait. You know what? I'll talk about Coinbase for 1 second. So Coinbase gets broken down for me into 2 main metrics for why I may be scared to hold this business or not. Okay. 1 is Coinbase trading volume, retail versus institutional. It is heavily leaning towards institutional, and that is continuously climbing. Q4 of 2023 was a very great site, but now that's starting to increase again. If this continues the way that I worry about, which becomes Coinbase is really just a B2B company, well, I'll show you what's going to happen. Transactional revenue. Retail brings in, the large bulk of total revenue, but yet institutions, although dealing in most of the trading volume, make up for 8% of the total, revenue here. Once again, Coinbase transactional take rates. This is why it's so worrisome. Institutions pay a much lower fee than retail does. 0.03% versus 1.8%. Disgusting. All right. And then lastly, another thing to counteract this is that's all transaction-based revenue. There is subscription and service-based revenue that could fill the gaps here. Okay. If this continues to go up and they can make money just not from trading directly, right? So you get people on Coinbase Card, you get them signed up for Coinbase One, Base continues to grow, these sort of things, then Base being the layer 2, Ethereum network that they're creating, then they can make up for some of those losses going to institutional, but that's important to track too. So those are the 2 main metrics that I like looking at past just their overall growth, which is legitimately impossible to try to do an outlook or forecast for Coinbase because it is so heavily tied to the actual, asset fluctuations for the business. That's also why subscription and service revenue is so great, because it kind of adds a little bit of a floor, but it's still so small comparatively to the rest of it. Tanner's a guest on Gary Gordon's value investing podcast. No, Okay. Ladies and gentlemen, thank you all so much for coming out, and really do appreciate your time. Can a brother get a notification? I don't know what you're referring to, but you can hit the bell down below if you want a notification for this. Really do appreciate your time. Bye for now.